95% of traders lose money. That's the cold truth. It's not the fault of the market, or the brokers, or the economy. It's because most people who step into the market never take the time to understand what game they're playing. They think they're investing, but they're gambling. They think they're following logic, but they're obeying emotion. When I began in the bucket shops, I watched prices all day. I saw how they moved, how they paused, how they broke through levels that once looked impossible. I didn't have much capital, just curiosity and observation. And in that tape, I discovered something that never changes. The market is nothing but human nature on display. Hope, fear, greed, and panic paraded in numbers. Every uptick is someone's confidence. Every downtick is someone's doubt. And those emotions, not logic, move the markets. The reason most traders lose isn't lack of knowledge, it's lack of control. They don't know how to manage themselves. I've seen men lose everything not because they lacked a good system, but because they couldn't follow one. The man who can't sit still, who can't wait, who can't accept a small loss, that man will never make money trading. The market is patient. You must be more patient than it is. When I was young, I thought the market was about being right. If I could just predict the next move, I'd be rich. But the market doesn't reward prediction. It rewards discipline. The only question that matters is not, will I be right, but what will I do when I'm wrong? I learned that lesson after losing my first fortune. I made a killing in the panic of 1907, shorting stocks when everyone else was praying for them to rise. But after success came arrogance. I thought I had it figured out. I broke my rules. I overtraded. I held losers too long. The market took everything back. It was a harsh reminder that the greatest danger in trading isn't failure, it's success. Success makes you careless. It makes you forget that every trade is independent, that the market owes you nothing. You start thinking you can't lose, and that's when you do. I'll tell you something most traders don't want to hear. If you can't handle losing, you'll never win. Losses are tuition in this business. The question isn't whether you'll lose, it's how much and how often you'll let those losses teach you something. When I was coming up, there were no indicators, no algorithms, no fancy tools, just the tape and my wits. The tape told me everything I needed to know: prices, volume, reaction. Those were my signals. And the more I watched, the more I realized that the tape was just a mirror reflecting human behavior. That's when I stopped trying to outthink the market and started trying to understand it. I learned to follow trends, not fight them, to let profits run and cut losses quickly, to wait for confirmation before entering, and most importantly, to stay out when conditions were unclear. That patience saved me more money than any trade ever made me. Now, before we go deeper, if you're serious about mastering this game, if you want more lessons that go beyond the myths and talk straight about what it takes to win, then go ahead and subscribe. Because what I share here isn't theory. It's blood-earned experience from a man who made and lost fortunes more than once. Now, let's continue. The first principle every trader must learn is humility. The market is bigger than you. It doesn't care about your opinion, your charts, or your conviction. When you argue with the tape, you lose. When you respect it, you survive. The market punishes ego. I've seen it ruin the smartest men I ever knew. They couldn't admit they were wrong. They double down, average down, rationalize, and hope. Hope is a beautiful emotion in life, but it's poison in trading. You can't hope your way out of a losing position. You can only act. That means cutting losses fast and clean, like a surgeon removing a tumor. Your first loss is your best loss. Small, controlled, and manageable. Let it grow, and it will consume you. The second principle is timing. Timing is everything in speculation. You can be right about the direction, but still lose if your timing is wrong. I've been early more times than I care to admit. And being early costs money, just like being wrong. You must wait for the market to confirm your opinion before you act. Never anticipate, react. Let the market tell you what it's doing. The big money is made in the sitting, not the thinking. The third principle is emotional balance. Fear and greed, these two emotions rule the trading world. When you learn to master them, you start seeing what others can't. When everyone is euphoric, you must be cautious. When everyone is panicking, you must be alert. The best trades are usually the hardest to make because they go against the crowd. In 1929, before the Great Crash, I saw the same signs I'd seen before every major panic. People were speculating recklessly. Taxi drivers were giving stock tips. Everyone thought the market could only go higher. That's when I knew the end was near. I went short. The crash came. Fortunes vanished overnight. People said I was lucky. But luck has little to do with survival. It was discipline, waiting for the right moment, following my plan, and never letting emotion interfere. And yet, even after all that, I made mistakes again. You see, in speculation, the lessons never end. Every market cycle tests your resolve. Every win tests your humility. Every loss tests your patience. The most dangerous phase for any trader is after a big win. That's when overconfidence creeps in. You start seeing the market as something you control. You take bigger risks. You break your own rules. And soon, the market reminds you who's boss. That's why I say, the goal in trading isn't to conquer the market, it's to survive it, to stay solvent long enough to catch the rare, truly big opportunities. Most traders fail because they exhaust themselves before those opportunities arrive. Another trap is overtrading. Traders can't resist the urge to be active. They feel if they're not trading, they're missing out. But inactivity is often the best position. There are times when you must wait, watch, and do nothing. The market pays the patient, not the busy. The real skill lies in knowing when to trade and when not to. It's like hunting. You don't shoot at every shadow. You wait for the clear shot. There's something else you should remember. The crowd is almost always wrong at turning points. At the top, everyone is greedy. At the bottom, everyone is afraid. If you can learn to think independently, to act against the crowd when your analysis confirms it, you'll have an edge that few possess. But that edge only matters if you have discipline. The best trading rule I ever made was this: never break your own rules, not even once. The market will tempt you to make exceptions just this time, just this stock. But one exception leads to another. Before you know it, your system is gone, replaced by impulse. I've had years when everything I touched turned to gold, and years when it all turned to dust. But the constant truth through all of it was that discipline, not intelligence, determined survival. I've watched traders ruin themselves because they couldn't walk away. They chased losses. They doubled their bets, trying to win it all back. They thought persistence would beat the market. But the market doesn't reward stubbornness. It rewards precision. Every trade must have a reason to exist. You should know before you enter where you'll get out, both in profit and in loss. If you can't define those points, you're not trading, you're guessing. Speculation isn't about being right often, it's about managing wrongness well. You can be wrong half the time and still grow your capital if your losses are small and your gains are large. That's the arithmetic of survival. And here's a truth that never grows old. Human nature doesn't change. The same emotions that moved the market in 1907 move it today. Technology changes, but psychology doesn't. The tools may evolve, but greed and fear remain the same. That's why the principles of speculation are timeless. Control yourself, follow the trend, cut losses quickly, let winners run, and never argue with the tape. It sounds simple, but simple isn't easy. In my career, I've seen every kind of trader, brilliant analysts, mathematicians, economists. Most of them failed. Not because they couldn't analyze, but because they couldn't obey their own analysis. They let hope override logic. Trading is a solitary business. You must think for yourself, act for yourself, and bear the consequences yourself. There's no room for blame. Every trade is your responsibility. That's both the burden and the freedom of this profession. And so, when people ask me why 95% of traders lose money, I tell them the truth. They lose because they can't master themselves. The market doesn't beat them, they beat themselves. If you want to succeed in speculation, understand this. Your emotions are the enemy. Your rules are your shield. Your patience is your weapon. The market will always test all three. If you can remain calm when others panic, if you can wait when others rush, and if you can act when others freeze, you'll belong to the 5% who endure. Remember this, the market isn't a place to get rich quick, it's a place to grow rich slow. Fortune favors the disciplined, not the desperate. So, the next time you trade, ask yourself one question. Are you reacting to price or to emotion? Because in that answer lies your future in this game. And that, my friend, is why 95% of traders lose and how you can avoid being one of them.